Hi traders, it's Roberto. In this tutorial I'm going to discuss how to recognize directional bias just using a few indicators with candlestick patterns. We're looking at the USD yen and coming into a new trading day, which was around here. The USD yen sold off. So there's a few things that you can do. If you're trading the European session and if you want to capture a small amount of pips, then what you can do is add, I'm using a Dukas copy platform. You need to use pivot points for this strategy to work. So what I do is add a pivot point indicator. So first thing I do is coming into a new trading day, two things. Price was hit a ceiling the other day, and then it started to retrace. Coming into a new trading day, notice that price was trading below the central pivot point. And that was your trigger to sell. You can add an 8 moving average line and just take a trade when price breaks below the 8 moving average line. Make sure its price is below the central pivot point. That would be your trade. And just to capture a small amount of pips, this went down about 38-40 pips. Now it's turning around and retracing. And you would definitely have to get out before it breaks above that 8 moving average line. So that's a very simple strategy. The other thing you can do is add other indicators to help you with directional bias. For example, if I add the Ichimoku indicator, it doesn't help me because it's inside the cloud. And normally when you see price action inside the cloud, you don't take a trade. You wait for either a breakout to the downside below the cloud when a body of a candle closes below, or above the cloud. But since we're just a scalping, we're looking for short 2 to 3 hour trades. That what we use is a central pivot point, 8 moving average line, take a trade, exit the trade before it breaks above that 8 moving average line. So that's one strategy. Okay. The other indicator I like using is a Bollinger Band. So let me just remove the 8 moving average line. And this is a lot easier to do. Bollinger Bands are great visual to see what is the overall direction of the market. So if I'm trading off a 1 hour chart and price breaks below this moving average line inside the Bollinger Band, and if the price is below the central pivot point, then I would like to sell. Okay. Now we're looking for a selling opportunity. Market sold off, and notice how it hit a bottom, right at the bottom of the lower Bollinger Band. It gave us a nice pin bar, which means indecision, which means if price breaks above, then we'll start looking for a buying opportunity. Now price is printing above that moving average line, so we're looking to buy. Okay, this is a buying opportunity. If this body of the candle closes above this moving average line inside the Bollinger Band, then we would buy and then exit before it hits the top of the Bollinger Band. The candle hasn't closed yet, so we can't take a trade, so we just have to wait. Price was in a downtrend. Now it's turning around and heading north. So as long as price can stay above this moving average line, then we can start looking for a buying opportunity. Okay, let's look at another pair. Euro dollar, same thing. Price at the beginning of the Asian going into the European session, price printed above this moving average line, above inside this Bollinger Band, simultaneously crossing this central pivot point. So that would have been a buying opportunity. Now remember, these are scalping techniques because we're trading off the 1 hour chart. We're not looking at long-term trade buy or sell signals. We're just looking at short-term 2 or 3 hours, and possibly for that particular day. They're intraday trades. So here the market broke above and put in 81 pips. Now we have news event coming out in an hour and a half, and I had taken this trade and exited at this level because I'm just waiting for that news event. But let me just throw up a historical data on pivot points so you can see how accurate and consistent this can be. Yesterday, not so much because there's so much little volume yesterday in euro dollar, but you can see that price stayed above the central pivot point and managed to put in 60 pips before it retraced and then continued on today. But if you look at Thursday, price was printing below the moving average line inside the Bollinger Band, and it was below the central pivot point, and it did sell off for about 60 pips. The same thing the previous day, price coming into a new trading day, trading below this moving average line inside the Bollinger Band and below the central pivot point, and it put in about 192 pips. Very easy to spot buy and sell signals on the 1 hour chart using this method. Okay, and let's look at one more, USD Swiss, and the same thing. Coming into, this was a little bit difficult because coming into a new day, price was printing above the moving average line, excuse me, and above the central pivot point. And this trade would not have worked because you would have had to reverse positions. If you were buying, you would have to reverse position and exit and sell below the central pivot point and below this moving average line. You would have made up all your losses. Price went down about 60 pips. Okay. Here's another trade. I'm looking at pound Australian dollar because I'm hoping this continues to go north. And of course, it's consolidating now because it's just waiting for a news event. But again, price broke above the central pivot point, above this moving average of the Bollinger Band, and currently it's in an uptrend, but it's hitting some resistance levels and just waiting, just to, hoping it doesn't break below the central pivot point, and we can look to buy this pair. And that's it for this tutorial. If you have any questions, please email me. And we're just going to wait for the news event at 8:30 and see what those numbers are before I send out a signal. So have a good weekend and talk to everyone next time.